Hi guys, my name is Tracy Lee. I'm the founding partner of Istari Ventures. So Istari Ventures is a leading early stage crypto fund that was specialized in crypto payments sector. And we have a strategic focus also in emerging markets like Latin America. So typically we invest into companies that falls into the fintech innovation, but using crypto technology and blockchain to serve that. So you can think about like a PayPal, Intuit, like a SoFi or Nubank into Latin America. So we basically invest into early stage of these companies, but they're using blockchain to solve these problems.
All right, thanks Max for the introduction. So I'm really here, we are based in Menlo Park. We are a global VC, GSL Ventures, been around for a while. We're not GSL the hedge fund, so don't confuse us with them. We are a pure-play VC that's been investing across the board and started investing in fintech Web3 recently. I've personally been involved in the space for almost a decade now. I think to answer your question directly, Max, on how things have changed, definitely I think given this context here, we do see a rotation from consumer, more of enterprise and institutional interest, and also development in the space. I mean, it's amazing to see a representative on Amazon. All the big tech firms are involved in blockchain. And I use the word specifically blockchain because distributed ledger technology is where we are focusing on, where our thesis is, and we can go further into the various use cases that we see being built quietly in a bear market for the consumer, but we do see a very active development market in the enterprise and institutional space that propels us to continue investing in the space.
Great. So now to finally answer the question regarding the SEC's recent rulings yesterday with Binance and today with Coinbase. I mean, where do you see this, this battle going? Do we see, these firms changing their stances in terms of, leading by litigation versus regulation, or is the majority of the business going to move to places that are a bit more crypto friendly, like Dubai and Singapore and these types of places that have started emerging? Hong Kong just recently announcing opening up to retail June 1st. So yeah, what's your take on, I guess, what's going on in the regulatory landscape? Because that dominates much of the conversation when you talk about crypto and digital assets with the average individual.
Yeah, I'll try to start. I'm sure each of us have kind of a hot take on it, but I think the institutional building that you're talking about is held back until we have regulatory clarity and frameworks here in the United States that would allow guardrails for what entrepreneurs can do and then what they can't do. So I think the clarity, I heard somebody talk about Mika earlier, like there are different parts of the world that are leading right now, and we feel like those kinds of frameworks that pop up in different jurisdictions will be the places where the crypto startups, Web3 and blockchain startups feel the most safe to build and to innovate. So I would wish here in this country that we'd be a little bit further than where we are, but true partnership, I think, will be the first step to unlock a lot of the institutional kind of interest. Consumer protections and security are always going to be things that we need to continue to infuse into the space. But again, the water and the oxygen that we're in right now is a little bit weird here in the US, and I'll be right here on the front row eating my popcorn and seeing what happens between these players.
Exactly.
I think I'll just start to say that I had just chat with a couple of my friends at Coinbase. I actually give you a quick background. I joined Coinbase custody around late 2018, initially building the institution grade of custody solution. And then I went to work for another custodian, then I led the product development at Circle. I can't really say on behalf of Binance, but I think at Coinbase, the overall thesis and sentiment is, they're gonna fight, right? They're gonna fight back with regulations. I think Coinbase has really been the iconic crypto brand in the US, but also just around the world. I think it's just so unfortunate the U.S. regulators are not really, working closely with all the private sector companies and trying to grow this industry. But instead, they're putting a lot of barriers, right? Hoops for folks to jump. I really believe the ecosystem, especially in Silicon Valley, where tech is really the core and heart of the soul of the whole valley, right? The private companies really need to get together. I think they can educate the regulators. They can have a stronger voice all together, and that's really, we can move the industry. Like, I just came back from Hong Kong and Singapore, and the regulation there are so in favor of crypto. All the conferences that I have been to, the government of Hong Kong sent people to stand at the booth, have a whole banner saying welcome, right? They're great people, great founders. So I think really for the US to still be ahead of the curve in innovation, we really need to educate the regulators, right, to work together with us to move the whole country forward even.
Yeah, just to add, what's ironic about educating the regulators is that, the US government has purchased and has interacted with crypto and digital assets in the past, and they've actually used Coinbase to do so. So I think this is an interesting kind of retroactive move. They also had to obviously sign off on the listing documents when they went public. They knew what their lines of business were. So I think this is, like, once again, leading by litigation versus open dialogue and regulatory discussions.
Yeah, nothing further to add on the actual two cases itself, but I think for us, taking a more, maybe operate on time frames of 5 to 10 years as a fund. I think looking back at the Mt. Gox collapse, and I think particularly one country that reacted in an interesting way was Japan. They instituted their Payment Services Act, which was actually back then a very strict way to register, license exchanges within Japan. And you fast forward 10 years from then to now, they're probably the only country that has a population that is very favorable towards crypto and adoption in terms of enterprise, consumer, whether NFTs or just blockchain rails within enterprise, is moving much faster. We see that movement happening in Europe as well. It is unfortunate that the US, due to its fragmentation of regulation and leadership, has been a bit slower to do so. But I think in the big picture, I think once all this dust settles, and there's a lot to be said about how it's being settled, but we do think that regulation will be beneficial in the long run, especially once things become clear, people are protected, and the sentiment can move towards a more positive note towards blockchain in general.
Yeah, so obviously we talked a little bit about enterprise adoption, which is really, I think, the competitive advantage that Plug and Play has, which we sit between 580 of the largest corporations, many of whom are represented in this room today, and 50,000 startups that have gone through our programs. That's kind of what we're focused on at the end of the day, is making sure that we can pick the best technologies to introduce to these corporations to get them into pilots and hopefully full-scale implementations. I guess when you think about enterprise adoption, where are we in that curve? And without naming regulation as the key kind of barrier to adoption, where do we see the landscape evolving towards next? And I guess what's your overall sentiment right now?
Yeah, that's a great question. I think in terms of educating our regulators, we also need to educate everyone. It's a whole new language to be able to try to explain blockchain, Web3, crypto to one's own family. Huge shout out to Shafi and Bonet and like all the educators who are doing the work to at massive scale, make stuff like ZKP at least in the lexicon, so that we can start to educate. Even inside of Amazon, there are people that are not crypto curious that need to know and need to be able to understand at least the 100 or 200 level frameworks of this if we're ever going to get like mass adoption or mass scale. I think education is one piece of it. I think you you need to do Web3 and crypto more than you need to know about it. So like you got to roll up your sleeves and like participate. So like, what is the way that we get many people, many students, many businesses and enterprises to actually dip their toe into the water? There's so many things that you kind of get hip to once you've done it 1 or 2 times, or once you've bridged something, or once you've purchased something or traded something. So I think participation after the education is the second key. And then third, I think the future, there's so many different applications. I think from kind of AI, Web3, like the intersection of those two emerging technologies has a lot of juice and a lot of upside. So I'm looking forward to seeing other verticals and industry-specific solutions and use cases come out. But it's also going to be something that I think Web3 partners with a lot of other emerging technologies and a bunch of other ideas in order to reach kind of the final destination of where it will be. I'm excited to see where it goes, but education, kind of exposure, and doing it are the 2 main things that I think need to happen.
100% agree with Brendan. I think what the institutions have been doing relatively well is being the awareness, right? Knowing crypto potentially is gonna disrupt their industry. What I have seen is most of the, at least US-based banks, fintech companies, they've always have sometimes could be like a one-person's team, right? Just have a crypto advocate, a crypto lead, and start doing some research and talking to companies and people in the industry. I think we're doing extremely well in that regards. However, I do see some challenges. So typically what I have seen out there is these companies, because most of them are, big size companies, they have different legal team, internal, compliance team, or other executives. Typically, it's really hard for company to move the needles, building a solid product that take tractions in the space. I think a couple of things could be they couldn't really retain the crypto talents, right? Talents tend to work for small startups. They like fast-moving environment, right? A lot of friends have told me that they joined a large company's crypto department. It's very chill. They don't do much because nothing they brought up can actually be executed, right? So I think that could be one of the huge challenges, but also like internal legal and regulations, compliance team are quite timid, right? Regards to like bring a digital assets into their balance sheet or companies, overall strategies. So these are a couple of challenges, but I also have seen some, let's say banks or some fintech companies are actually participating there's a couple of ways. So for example, we recently have invested into a Latin America micro lending company. It's called a Quipu, Q-U-I-P-U. So one of their investors is actually the Bank of Colombia. It's called a Banco Colombia. Right, so basically they're serving the local residents who couldn't get small business owners couldn't get a bank loan. And Banco Colombia really liked their solution. So they joined around, invest into them. So typically I see these companies, for banks, right, they basically got exposure. They can get a conversation with the founders to know the real industry, what is happening. They can access to data room, access to private data, where you can typically never read it from a report or reading from the blogs. So I think that's really a great way to participate. And also the other one could be, you launch some accelerator programs to draw startups really building around your company's technologies. That's another great way. But also I think from my fund perspective, we also have a commercial bank, we also have fintech funds, are investor of the fund. So they're typically get exposure to all of our investment into the payment sectors. They're also able to get more private information on how we invest, how the company are doing, And then, sometimes they request to sit into more meetings with the startup founders. So I think that's another way really to get, a stronger participation in the space. I'll quick end this. I really think the long term for these institutions to have a better impact in the space, potentially will be some acquisition, interest, right? If they can build, they can buy a company to beef up their product offering, right? So that's another trend I'm seeing right now.
Yeah, and great answers. I think number one, shout out to Plug and Play for bringing everybody together. I'm not too sure how many frequent flyer miles nights they are accumulating, but Paris is a nice place, and great to see everyone here. I think the only thing I'll add is that what we're seeing on the enterprise and institutional side, I think it's fundamentally always been the build versus buy question. I would say in the last 10 years, what has significantly changed is that I think the need to build internally, and that's only affordable by the biggest companies and the biggest institutions in the space. So we see governments and big banks and institutions building their own stuff by themselves historically. I think gradually we are seeing startups in the space that are, I would say, good enough, or at least have the proper understanding to partner, approach, and sell to larger companies and larger institutions, and that's an encouraging sign. I still think that we have a long way to go. There's all this TradFi to Web3 migration, bringing talent in, but we do need a better understanding of what enterprise use cases are there, what institutions need, and the talent to understand the language of larger enterprises to build the companies that will then produce products that answer these questions. I would say that it's not fully mature yet. I think in our judgment, we definitely see Web2 enterprise startups being more capable, having better talent. But I think in the long run, we do see that shift happening, and that's very encouraging for us as we think about the enterprise ecosystem being a more healthy one, consisting of startups, larger enterprises, and institutions working together, rather than it just being an in-house development team pushing forward a blockchain or crypto agenda. So that's what we see right now.
So we talked briefly about AI. Wei-Li, you mentioned prized use cases for digital assets. So crypto is obviously an industry which at this point has gone through both periods of unfounded hype, and I guess today the future still remains somewhat unclear. When are we going to get our ChatGPT? That's kind of what I'm asking for this question. What is the use case within crypto and digital assets that will make apparent to the general public without having a very granular understanding of how these systems work, that this technology is actually revolutionary? I think we've still been waiting for that, and it's we've obviously, and I don't know if we're going to compare AI to crypto and digital assets, which has a longer lifespan. I mean, it's probably close, maybe in its full maturity, but yeah, I mean, where is the prized use case?
Yeah, I'll start off again, and I think there are probably many use cases. So I've got my roots in West Africa, right? If I want to send 100 units of something from the United States over to another jurisdiction or another country, typically, there's many units, 10, 20, 25 units of that is going to go to the middle person. So that peer-to-peer transfer of assets is, I think, the use case that has been most focused on cross-border kind of payments. I think gaming, like as I kind of raise my kids and they're playing their Animal Crossing or their Roblox or their Minecraft or whatever, it's very easy to see how gaming can sit on top of many different kind of blockchain networks, and how kind of the transfer of things, digital things inside of one container of a game can be transposed and transferred from scenario to scenario. And then, we saw Apple announcement yesterday, taking this stuff into the metaverse or into virtual reality and AR. How cool would it be to be able to also kind of take some of those assets that you've paid for into kind of this new immersive experience? So these are all kind of being tested. You know, we don't have longitudinal studies to show whether they're gonna live or die in the near term. But these are three that I'm excited about right now. And to the extent that, you know, excitement on university campuses, if that's any barometer or any test, right? I'm a UC Berkeley graduate as well, so go Bears. I teach, I get applause for that, okay, thank you. And I teach a class at Stanford called Redesigning Finance. And we just finished up our quarter yesterday, and a bunch of the student presentations, they lean and they skew towards Web3, towards blockchain, towards crypto. So like the collegiate level, academic level excitement is definitely there.
Yeah.
And I'm hoping that, you know, generation will also produce maybe some use cases that none of us have seen or are thinking about yet.
I think I'll start with giving you some numbers. If you think about Latin America, crypto adoption rate is over 50%. A country like Vietnam, crypto adoption rate is 23%. So which means in countries, you know, like most people are actually unbanked, have a high inflation rate of their local currencies, you actually, as of today, you see crypto are being widely used to transfer money. We have actually seen the most use cases in these regions are remittance services, payments. Some are relating to FX. You basically need to exchange currencies and then move them around into another country. So for us, really think about the adoption, right? It's really around our investment thesis as well. We really believe for crypto to be widely adopted, using them as a way of transfer money from point A to point B, that's the easiest way to get adopted. I think, I'll give you some also examples. I think a lot of people are not really familiar with how Circle as a company, how they make money basically. One of the core revenue driver is actually through crypto payments, like e-commerce payments. So if you think about today, you go to a website, let's say Etsy, to buy some furniture, you pay, you check out, you go through your Visa credit card, make $100 payments, and Etsy receives it. For crypto payment use cases, for Circle, they can actually replace the Visa network payment rail to transfer that $100, directly convert it to USDC, and move that on a blockchain to settle that $100 into Etsy's corporate crypto wallet account, right? So when you talk about adoption, like these consumers who are buying these on the e-commerce side, basically have no idea they made a crypto purchase, but it's happening as of today. So that's why because you know, I somewhat have worked on these products, have these insights. We really believe in the future, how you get massively adopted in the short term is really through payments. You can use a credit card to buy NFTs as well, but everything will settle and transfer on a blockchain versus going through like a Visa or MasterCard. You know, sorry about it, folks, but they know their market share is slightly getting sliced away by crypto companies. And also like a banking system, for example, like Swift, right? So now if you're enabling crypto remittance services, you really don't have to go to the bank Swift network anymore, right? You don't pay the $30 wire fee, and you get settled literally in a few seconds, right? For today as the banking system, right? You have the bank holidays, you have the cutoff time at 3 or 4 p.m. So a lot of time you actually cannot transfer any money within the institutions or bank accounts, right? So that's really, we think of the future of blockchain and crypto. It really aligns on how can we innovate to bring it to a daily kind of use cases, to purchase stuff, paying bills, move money between accounts, purchase, you know, online or offline, right? That kind of use cases. So that's what we believe, and we're really, really bullish on. That's going to be the future of crypto massive adoption?
Yeah, I agree with both. I think especially to Brandon's point on, I think it's up to the founders and even the in-house teams to really innovate. I mean, we are facilitators of the innovation, and I agree with Tracy that fintech payments is definitely a core thesis. I think to Max, your other question of like, what's the ChatGPT moment of Web3? I think that's happened. I mean, for me it was Bitcoin, for me it was Ethereum, for me it was NFTs. I mean, those were major drivers of various ways, and accessory to that would be DeFi, homomorphic encryption, ZKPs, and all that. I think that's mainly on the technical side. I do think that what we are trying to facilitate, or what we are as investors interested in, is really business model innovations that can occur due to blockchain technologies in the background. Whether it's a combination of blockchain and zero knowledge facilitating scale, privacy preserving use cases in finance, in logistics, in insurance. I don't think we are the ones that can provide the answers. We want to facilitate founders and teams that can experiment and give them the chance to create all these exciting products in the space using these background technologies. I think that's where we approach it. We are bullish in finance, we are bullish in payments, we have made investments in the space in identity, in privacy preserving solutions. But again, I would take a step back and say that I'm an investor, I'm not the founder, and we are really interested in see what people are building, so we can facilitate the creation of a ChatGPT product.
I guess the last question that we'll ask, just to bring it back to the actual investment side, we've seen quite a shift in the past year in how venture firms are choosing how to fund some of the projects. We saw, obviously, in 2016, 17, the rise of the ICO. We saw SAFs as of 2 years ago, and now we're learning about IDOs or IEOs. So a lot of venture firms that back last year or even 2 years ago would have jumped at the chance to invest in liquid tokens have now actually come out with policies saying no more token investments. Is the token investment as a funding mechanism dead, or especially with the regulation? I mean, where do we see that space going? Maybe we can just do a quick kind of just round of thoughts.
I'll leave it to the experts, but I do think like the time horizon of a VC, right? You put your money in, you invested in the first 2-3 years of a fund, and then years 3 through 10 are where you would typically see your return. With the token values that go up and down, I'm not sure that model is the right model to invest. So I love that crypto funds that are kind of peeling themselves off of the main kind of brands like Andreessen or like Sequoia, like they're doing a dedicated thing that's wholly separate from like the historical way to invest. So I do think it'll take some innovation in that category in order for us to kind of find the right thing to do moving forward. But I'm actually really interested in Tracy and so.
Yeah, I would say the token investment is definitely not dead, right? But we have been seeing a huge shift of more and more companies not launching tokens in the bear market, rather to do equity as the company way of valuating it. I think historically, the value of launching tokens for a startup is basically for investors and founders to get liquidity much faster, right? So in token rounds, sometimes you can liquidate your investment within, let's say, 12 months or 18 months, right? Investors get their full investment back. But in the bear market, I think the market is shrinking, liquidity is smaller. A lot of crypto allocators are more careful in this market, and they're looking at the microeconomics, the overall, right, the market trend. So people tend to be more reserved buying tokens. So the smart founders, I would say, they're more diligent at this moment, rethinking about their strategies. Will they be a token, a company evaluated by their token, or they want to go with a traditional route, being evaluated by their equity round? So we really been seeing a huge shift, right, into more founders choosing to go with a traditional equity investment. As I mentioned, that some companies don't fall into equity. So for example, layer 1 or layer 2, right, they are a token themselves, basically. It makes more sense for them to launch tokens. Their company value is valuated by the token price. But for a lot of companies, let's say what we invest into the institution side or payment side, launching a token doesn't really make a lot of sense, right? How we see it is what is the utility of the token? Why do you need to have this token? How the customers or participant can get value out of your token, which I don't think anybody has really figured out a great way to do this in the payment sector or institution sector. For us, if any company telling me they're launching a token, it's such a red flag. I actually would pass on these deals rather than invest because this doesn't really make economic sense, right? So that's kind of the overall shift in this market right now.
That's super interesting, Tracy. I think for us, at least as a fund, we're kind of agnostic. I think any tokenization is a business model innovation fundamentally, right? You're really launching ownership in a very, very different way from the past. And I think for us, just being mindful of what the token does, what's the utility, where is it being launched, is it compliant, and especially for us as a fund, we have compliant regulation. But beyond that, I think again, it's really up to the founder to think about what's the utility, or the team to think about what's the utility of the token, why the token exists, and how do you expect people who hold the token, including investors like us, to use these tokens, and what function does it play? I think if those questions can be answered in a reasonable way, we are agnostic. So that's our basis.
Great. Well, with that, we're going to conclude the panel. Thank you very much for joining. We're now going to hear from our wonderful batch startups. So I'll hand it back to Bob.